Today, our stock analysis is going to focus on the health insurance company Humana, ticker HUM. Year to date, the stock is down 30%, but let's take a quick minute and look at their financials. So let's jump right into it. Starting off at the top with revenue showing consistent growth since 2014, and the only down year being in 2017. And overall, looks like it's up nearly 120% over the decade. Then we have net income and earnings per share. Though the company has had three consecutive down years starting from 2021 for each of these data points, but net income has more than doubled from 1.1 billion to 2.5 billion, while earnings per share has increased from $7.36 to $20, which is more than 150% growth. Next, two data points I always like looking at for a company. First being dividends, which I like seeing growing over time, and Humana has delivered on this, going from $1.11 to $3.54, which is more than a 200% gain. Then share count, which I like seeing on the decline, and Humana has repurchased more than 30 million shares, reducing the outstanding count from 155 million to 124 million since 2014. Then free cash flow, we can see some choppiness during the last 10 years, but still up nearly 200% from 1.1 billion to almost 3.2 billion since 2014. So overall, for the past 10 years, Humana does show some good growth signs, though there are some concerns with these recent years being down. As we mentioned, net income and earnings per share. We can also see free cash flow is down as well. But let's move on now and look at the stock valuation. Here's the intrinsic value setup, and I come up with $419.34, and with a 80% margin of safety, brings that down to $335.47. And this is based on a 8% short-term growth rate for the next 10 years with a 10% discount rate, and I am using a 3% long-term growth rate. Now, up here on the top right, net income CAGR, 8.99%, and earnings per share CAGR at 11.75% for the last 10 years. Now, my 8% short-term growth rate, definitely below that, and this is because when we looked at the financials, we saw that both net income and earnings per share for the past 3 years have been on the decline. So being conservative and also using a 80% margin of safety, because free cash flow, we saw 2 of the last 3 years, it has declined. So again, being conservative. Now the stock price is trading around $310, and about a year ago it was in the high 400s, even in the $500 range. So the market's definitely revalued the price well below my margin of safety, and it does appear to be a buying opportunity. But before investing, I would do a little more of a deep dive first, listening to a few recent earnings calls and trying to understand why that net income has been sliding down for the last 3 years and what type of guidance management is given. But let's look at a few other data points. So first, PE ratio, 19.38, probably a little bit more on the higher side than I like to see. But when I did look at their history, their PE has oftentimes been in the 20s, so maybe it's not too bad. And then long-term debt to free cash flow, I normally like seeing under 3. We see 3.2, so it's not too high, but still a slight concern. Then a great data point, dividends up almost 220%. Really like seeing that. But dividend yield, it's only 1.1, so they're not giving much of a dividend, though it has been growing for the last 10 years. And another great data point, share count down just over 20%. Really like seeing that. And then net profit margin, I normally like seeing companies 10% or higher. I see the last 10 years slightly over 3%, and the last 3 years slightly under 3%. So it's just something you need to take into account. And then one last data point I always like looking at is return on invested capital. And again, I like seeing 10% or higher. We see they have been achieving that, though the last 1 year slightly below that at 9%. But still, looks like management knows how to return value to shareholders. So that is a great sign there. Now, let's move on and we'll just look at my portfolio's performance. Here's the portfolio's overall performance, and I'll point out a few individual stocks. So first, Google, since buying into it maybe about 2-3 months ago, I'm up to roughly 13%, but they did have their recent earnings call, and I wouldn't be surprised if this ticks up a little bit more. Also, NVIDIA, so again, I bought into this maybe about 2-3 months ago as well, and it was doing fairly well, but over the last 2 weeks or so, stock price definitely has dropped, but has recovered over the last couple of days, so hoping it recovers a little bit more. And then Tesla, Tesla had some rough time over the past 2 months as well. See, I am down, though. I think they gave a pretty good earnings call the other day. So hopefully another couple of quarters, this can start turning around a little bit more. I hope you enjoyed this video, got some useful information, and I hope to see you next time. Thanks for watching.